In this video, we're going to talk about the various costs that go into the expense ratio of a mutual fund. So the expense ratio is the annual cost of running the fund. And when I say annual cost, what I mean is this is an ongoing cost. So this is distinct from a load where we think of a front-end load or a back-end load that you paid to get into a fund. This is distinct from a load. It's going to be an annual cost, and it's going to be some kind of fixed percentage of the fund's assets. So fixed percentage of fund assets. So for example, you might say that the particular fund, the expense ratio happens to be 1.5%. That means that every year, if you have assets that are being managed in this fund, you're going to be charged 1.5% of what your assets are going to go immediately toward that expense ratio, right? So if you have $100 in the fund, every year you're going to have $1.50 in costs related to this expense ratio, okay? So what are the various types of things that are going to go into this expense ratio? Well, probably the largest thing that's going to go in is going to be the cost of paying the manager. Right, so you have something called a management fee or an advisory fee or investment advisory, and basically you're just paying the manager who runs the fund. Now, obviously, these costs are going to be higher. This is going to be higher if it's an actively traded fund. So if it was or actively managed, I should say, not traded. Well, traded also, but actively managed. What I mean by actively managed is that the manager is trading the securities on a frequent basis, the securities that are in the fund. If it's just an index fund or something, then it's passively managed, then the management fee is going to be lower because all the manager has to do in that case is just buy all the stocks that are in the index that the fund is tracking. For example, if it's an S&P 500 index fund, the manager just says, okay, I'll just buy an equal weight of all the different stocks that are available on the S&P 500. They don't really have to do a lot of thinking. But if it's actively managed and the manager is having to make decisions about which stocks to buy and sell, then obviously the management fee is going to be larger. And then in many cases, this is the largest component of the operating expense ratio. But also, when we think about the operating expense ratio, or the expense ratio, I should say, operating expenses are going to be a part regardless of whether it's actively managed, passively managed. There's going to be some expenses for record keeping, for mailing people who have invested in the fund, mailing them statements, for doing the accounting, paying auditors and so forth for the fund. Just kind of administrative costs, and you might see this called as an administrative fee, an operating expense fee. So every fund is going to have that. Sometimes it just depends on how good the fund is in managing these types of costs, but usually it's not nearly as large as what the management fee will be. But 12B1 fees are something that not all funds have. Now, 12B1 fee is basically it's a marketing or advertising fee. And what it is let's say, for example, that your fund was trying to attract new investors and they ran ads. Let's say that they ran advertising. They run some ads. That's going to be a 12B1 fee. It's a distribution fee, it's sometimes called. It's basically a cost of promoting the fund. And so you probably won't be too happy if you see these kind of fees because you're thinking, look, I just want my assets to go and have a return. I don't want a 1% or whatever this fee would be. I don't want this eating into my return. From the perspective of the fund, they're trying to attract new people. They're trying to basically pump up or promote the fund. Now, although all the expense ratio is distinct from a load, although that's the case, I'm just going to mention something briefly about loads, and that is that with respect to this 12B1 fees, for a fund to qualify as no load, then the 12B1 fees here cannot exceed 0.25% of the fund assets. So these which makes sense, right? If it's going to be a, quote, no load fund, they're just saying, well, even though this isn't part of the load, these 12B1 fees can't be excessive. Okay. So when we think about these different costs, they can actually add up and be quite significant. Now, some firms, or excuse me, some mutual funds, let's say it might be that the entire expense ratio is 0.5%. And then another one, you might have another fund that has 1.5%, right? This is triple. This is triple what this fund is. And so we could talk about management fees and whether the fund is actively or passively managed, but some funds are just better at keeping expenses low.